Peter McGuire, CEO, AustraliaTrading.com, joining us this morning. Peter, good morning. Thank you so much for taking time out and joining us. And I'm actually quite confused what we should start with first, because, you know, when you take a look at this war, not only is it a prolonged war that you're staring at right now, you're also looking at some of the key assumptions for the markets, be it equity, be it the oil investors. Also, every assumption that we had has largely been transformed right now. But first things first, I want to be starting with oil. What are you looking at in terms of the kind of impact? Because definitely a protracted conflict is what you're staring at.
Exactly, and good morning, Shreyansi, and greetings from Sydney. You know, I tell you what, we hit through $82.50 as far as Brent only in the last 15 minutes or so, and it's given up some of those gains. It's back under 82. And WTI very strongly bid up as well, over $75 a barrel. Now, everyone's got a mindset, is this going to be a short-term event? And by the lens of looking through it at the moment, I would say it's going to be protracted, as you mentioned, and this could take a matter of weeks. President Trump has said that. So let's see how it unpacks. But more importantly, that choke point as far as the Strait of Hormuz, if he's going to allow and going to have insurance and US Navy also to escort any shipping or all vessels through that area, that's going to add a level of safety. And one wouldn't want to attack the US Navy, because I'm sure that they'll be very, very on the offense and certainly won't play defense when it comes to protecting all vessels.
Absolutely, and that's something that you're looking at, which brings me to my next point. You're looking at a largely risk-off sentiment right now in terms of the equity markets. How are you reading into the sentiment right now? And what are you then expecting going forward as well? Because like you said, it's a little bit of a protracted conflict that you're staring at right now. 4 days into the hostility, it doesn't look like it's going to end anytime soon.
No, exactly right. I would have thought that there was every possibility, and a lot of analysts were saying it'll only be a short run. And now we're looking at, you know, approaching day 5, I think, starts sometime later today. Now, the next part, of course, as you mentioned, I noticed that the Topics and the Nikkei 225 out of Japan, both those indexes, are down over 3% today. So I'm looking at probably a little bit further correction as far as Asia's softness for the rest of this week. Let's see how it rolls. You saw big volatility across the Dow yesterday, the Tuesday session, and the VIX was bid up. That S&P 500 options, the volatility index, it was up 9.93% for the day, which is a pretty healthy move, and sat at about 23.57. So I'm expecting volatility to remain in the short run, and let's see where we are probably Friday as far as price.
Absolutely, and I wanted to also try and get a sense of what you think about the impact on central banks right now, because there's quite a lot of concerns when you talk about inflation as well. But before I do that, Peter, historically, you've seen that markets really shift their attention just before and after a conflict is when you see a reaction typically coming in. Is that the sense that you're gathering here? Because right now, you've had a bunch of global shocks that are in the background as well to this particular war.
Absolutely. I mean, you know, this is it's like a symphony playing at the moment, Shreyansi, because there's just so many moving parts and many players to the whole argument. We understand the positioning as far as UAE, what's happening with Saudi. You've got Qatar as well, number 2 as far as the export size of the LNG market. And then Iran, how that positioned. You've got issues as far as Iraq at the moment. So these, and Aramco, I noticed, wanted to try and divert oil to the Red Sea, and and the shipping market has been reluctant to take that on. So it's all, again, positioning, how it plays, and that normally creates volatility, which in turn is not what really traders like, but certainly the man and woman on the street have difficulty in trying to appreciate price upward moves.
No, absolutely. That's something that you're looking at. But when you look beyond the headlines, Peter, you know, when you talk about the central banks as well, there's that inflation story also making it to the top of the list. Because right now, given the kind of uncertainty that you have, it's actually very difficult to be able to really take a closer look at the path, even when it comes to the Federal Reserve, but also central banks across the world that's staring at quite a lot of uncertainty.
Well, that's right. We all understand the inflation impact as far as higher prices, Sriyansi. So if you're going to see this to be protracted, that's going to have an impact as far as inflation. Then in turn, you would not be expecting rate cuts. And certainly from the Fed's perspective, they've got to see inflation numbers and headcount as far as non-farm payroll, which will be released this Friday. So all of those inputs create uncertainty again. And then you only got to add the next part. You're only 2 months away from Fed Chair Powell resigning. So yes, the market and certainly the Fed is under a lot of tension at the moment, and we've just got to work through that and see how prices move forward from here and whether they continue to escalate to the upside.
And I also wanted to move to the sectors that are quite impacted right now. But, the first one that makes it to my list right now this morning is Qatar, of course, halting production of the largest LNG plant in the world following those drone attacks. So how are you looking at the impact of this? And which are the sectors, which are the companies that you're looking at a little more closely right now?
Well, I'm looking naturally at the impact from supply chains and, and you're looking at pipelines, you're looking at LNG production all across Qatar, and the issue that faces as far as having to be able to, to store it. Then you're looking at the next part as far as transportation, so pipeline and looking through shipping. And if President Trump's standing on his word, then that's going to help that. But again, it adds to confusion to the market, and the market doesn't like being confused. Normally, it just wants straight out, clarity. And so the positioning at the moment is going to come to price push up from here. And I'm sure that the LNG market is going to be bid up, and we're noticing that in Europe. And so, gas availability, as it says there on the screen, could be an issue moving forward. And there is a lot of uncertainty across that whole landscape.
Really, and I had a little bit of a follow-up when you talk about oil as well. Since we're talking about the energy space, I wanted to quickly try and understand if you think that the geopolitical risk premium has been sufficiently digested at this point in time. What do you also expect in terms of the key risks here? Because you're staring at a very big conflict. You're looking at a big alliance share of, the supply chain really being impacted by this particular conflict.
Exactly. It's bid up strongly since Friday, and you're up the best part of nearly $10 as far as Brent. So that war premium has been built in. If things were going to escalate from here, and one never knows with war, if you're going to see more attacks from Iran and so in turn create more uncertainty, then you would see higher prices. Now it's edging up. Yesterday it was at crack through 80 in late afternoon Sydney time. Here it is 1 o'clock in the afternoon, and we've been to 82.50. So it's certainly moving upwards, not downwards. So that's Brent. And the way it's moving, you've probably got to have an 85 handle on everyone's radar to see if we're there by Friday.
Absolutely, and which brings me back to gold as well, because you do have that investors really at this point in time flocking to safe haven safety right now, and that's something that you're looking at as a key trigger. You're looking at that test of that $5,400 an ounce level that you're looking at for gold.
Yeah.
You're looking at that all-time high also really being challenged, and this is, mind you, just days into the war. You could be looking at a protracted conflict as well. Against that backdrop, how are you looking at the entire precious metals complex?
Well, it was interesting. On Monday, we were at 50, before the market opened up, we were at 52.04, I think, and it moved up very strongly. Or it might have been 52.50 anyway. It got to 54.02. So it was a strong move, $150. We've stripped out about $200 since then, in the sense of now around about 5,190. And that's just volatile. So I expect that move to the upside to continue, Sriyansi. There's probably margin calls and people positioning, and you can't be long when everyone's been short over the last 24 hours as far as gold. So I'm expecting gold to probably consolidate at this point and then move back up. And yes, it could well take out those highs sometime over the next couple of weeks.
No, absolutely. And Peter, what's the fine print that you're looking at here? I'm looking for concluding comments here as we wrap up this conversation, because there's a lot that we've covered right now, and there's a lot that you're looking at by the way of headlines. Against that backdrop, what are you then looking at when it comes to equities, but also commodities?
Well, when I have a look at equities, I want to see how Asia trades, and I want to see the pullback as far as the likes of Japan and whether this impact is going to be felt across China. Then I'm looking naturally across the European bourses and to see movement. The US demonstrated last night softness, and is that going to continue today's session in New York? And then how does the rest of the week look? So there's that side of it. As far as commodities, I'm conscious as far as precious metals and energy, where that's moving, and copper at the moment, and the base metals seem to be under a little bit of pressure to the downside, but that could be margin calls. So, from a trading perspective, look at all of those particular markets and try and appreciate it. And don't forget, you've got to look at the US dollar index. We had a 99.55 strength overnight. Very, very strong, approaching that 100 handle. It's back at about 99.30 at the moment. So, yeah, keep an eye on US dollar index because that's a true barometer as far as economic situation.
Absolutely, and that's also something to add to the entire list in terms of everything that we've covered this morning. Thank you so much, Peter, for taking time out and joining us this morning.